Why is gold dumping? And I'm going to explain this exactly from where this happened. Okay. That being said, my name is Rocky Calvin, and welcome to another chapter. And this is going to be quite interesting one. I previously talked about energy, frequency, and vibration, how this aligns, towards what you want in life and also in trading. And I also, discussed about market structure shift and so on. So the notes I'm removing here was for previous lectures. They're all in this channel, so you can. I actually also did another video today about CPI. Yep, so you guys go check it out. So, but I want to talk about why is gold dumping and for how long. For so long, people have told you price action is king. Price action is king. I agree. Price action is king. But guys, there's one thing that you see, price action. There's an logarithm running these markets, and this logarithm nobody controls it. What controls it is what's happening in real time in the world. Because you see, this is money. You see all this move. This is money. This is liquidity. This logarithm is programmed in terms of liquidity. So when liquidity has been tampered with, for example, there's an issue with interest rates and so on, then automatically, meaning that uh, investors are going to withdraw their money. If they withdraw their money, it simply means that the strength of this currency pair is gonna, or let's say strength for gold is gonna pull down. So let us take a look at what really happened here. On Wednesday 28th, just let's see what's happening. I'm not really sure if okay, let me leave that pen. But if you guys can open your forex factory and take a look at what was happening during these days, you realize why I'm saying that. Fundamentals will give you the heads up. When you align fundamentals with the technical, you become untouchable. Trust me, you become untouchable for sure. Because you see what was happening here on this Friday 30th January. I remember Trump had announced that he was he was he was to announce a new U.S. Federal Reserve chair, meaning that Powell was being taken out of office. Trump announced this, and immediately see what happened. Why did this happen? Because you see, gold had just hit all-time highs. It hit all-time highs 5,000 for the first time. 5,000. 600 for the first time. Okay, and investors who are now using gold as a safe haven, when they hear this, then they say Trump is replacing the Fed chair. Then that simply means that now that's that's like there's that worry. So they don't know what's going to happen, and some of them have so much trust in Trump and so on, so meaning that the dollar was strengthened, and you see what that did, because this is always competing against the dollar. It is XAUSD. So apart from that, why is gold dumping and for how long? The real reason here, it all depends with macroeconomics. For gold to go higher, investors have to invest in it as a safe haven. There's a relationship between gold. There's a relationship between gold, let's say XAU. Then let's also say oil, and then let's say dollar. I'm gonna do another separate video about this. I need you guys to take a look closely. All these are in competition. Okay, dollar is the world reserve currency, meaning that everywhere dollar is still powerful. It is the world reserve currency. But you have investors who sometimes, when they feel like the interest rates, for example, the interest rates in the US dollar is low, meaning that they're not gaining returns well. Or for example, US is involved in wars, so they can't trust it. What do? they go to either of these. They either invest in gold or oil. Okay. Now I want you to pay close attention what's happening between gold and oil here. Okay. When uh, when gold, sorry, when oil prices start rising, and rising, why? Because a very good example is right now what's happening in Iran. We have the Strait of Hormuz, whereby at least 20% of of global oil shipping usually pass through, is currently passage is not accessible for oil, and this literally increases the price of oil high. It's the same thing when you hear there's something happening between Russia and Ukraine. You gotta take the look at what exactly do these nations or countries hold so much that in case a war break out, there's gonna be an inefficiency, or there's gonna be lack, or there's gonna be demand. So see, for example, when Iran and the US are fighting in the about the Strait of Hormuz, oil is not going to pass. When oil is not going to pass, meaning that that's going to create now what we call demand. Okay, when demand is created, this automatically hikes prices immediately of oil. Remember, investors want to invest in oil and gold, right? As an investor, you don't just invest based on your choice, like saying like I like gold, I'm going to invest in gold, or I like oil. It doesn't work like that. It works with understanding, and these are people who have teams who sit down and see, study, macroeconomics, who study what's really happening in the world. These are serious people. These are billionaires. So they sit down and they take a look. For example, right now, if they compare oil prices are gonna hike. Why? Because the demand is high, because the Strait of Hormuz has been locked, and this is what actually been happening down here. You see all this drop here. Anytime there's an attack, in Strait of Hormuz, boom, we go down. Gold has been going down, but on the other hand, you'll find oil is pushing higher. But on the other hand, also you find the dollar is also pushing higher. So I know that issue leads a lot of confusion, and I'm here to explain that exactly. That's why I mapped out these three uh, items here: oil, gold, oil, and the dollar, US dollar. Okay, so when the Strait of Hormuz is locked, that's going to create what you call demand. Now, demand is a situation whereby, like when demand is too high, like people need fuel, you find like vehicles are even being stationed because of lack of fuel. This automatically will hike prices. So investors will see right now, if we invest in oil, prices are doing what? Are shooting higher. What do? They put all their money there. When they put their money, automatically this algorithm wants liquidity. So liquidity, there's a lot of investors who are buying. So what does that do? It push it higher. Automatically oil will go higher. Now, what does this do to gold? Remember, these investors who are now investing in oil were initially investing in gold, but they have withdrawn their investment from gold. They're pushing it into what? Into oil. What does this do to gold? Gold is losing strength. Gold is losing strength. Now, on the other hand, the US dollar, for example, the Federal Reserve, or the Feds, are, for example, withholding interest rates, or they're hiking. What does that do to the dollar? It gives the dollar strength. And remember, we are trading against gold. XAUSD, it is gold versus the dollar. So when the dollar is strong, gold is going to be weak, and when gold is strong, the dollar is going to be weak. All this depends on interest rates, inflation, and literally they all have the same thing. Like they correlate with each other. When we talk about interest rates, we talk about inflation, we talk about NFP, we talk about CPI. All these things, it's all about inflation, by the way. Okay, so I'm gonna do another topic about inflation, like what is really inflation. So check out in the next one. Like I'm gonna explain what is inflation, and how inflation, affects, this, like what really happens here. So, for example, let me show you guys. Right now, as we're talking right now, there is a challenge in Iran. At least two soldiers were confirmed dead this weekend. These are American military soldiers. They were confirmed dead this weekend, and this is after as a result of Iran striking. I think it was Jordan. I think it was Jordan. You guys always, you have to stay updated with the news. If you wanna be successful trader, you have to. Like me, when I was, when I was beginning, I used to have that, that pride that price action is king. But trust me, this Iran war has taught me a lot. This war has really opened myself. I was like, from now on, I'm not going to be trusting just my technical side of it only. I'll have to pay attention to the, to the geopolitical issues, what's happening around the world. So, for example, what has just happened this weekend? They've killed two U.S. soldiers, and Trump has done what? Trump has given order to CENTCOM. Is it CENTCOM, Central Command, right, of the United States Army, to unleash hell on Iran. What do you think is going to happen? There's meaning that fuel is like Strait of Hormuz is still going to be closed, and I had Iran having plans to even orchestrate on locking some other tunnel, some other shipping, tunnel, and that will just make oil very scarce. So when oil is scarce, and you see investors have also, they're aware of this news that has happened. So some who already invested in gold, they're now removing their investment right there, and they're putting it into what? Into gold. Sorry, into oil. Now, if you take a look at technical analysis, now this is where the magic happens. The fundamental or the macroeconomics I've talked about, like what has happened this weekend, some US soldiers are being killed. Trump has given orders to unleash hell on Iran. Okay? That is bad news for gold. Why? Because investors are gonna rush their money, or investors are gonna put their money into what? Into oil. Now remember, oil is not competing with gold literally, but oil and gold, like they're kind of in the same criteria when investors want to invest their money. They're safe havens. That's the best term to use. On the other hand, US dollar is the investor in US dollar because of interest rates. If you are a billionaire, let's assume you have money right now, you want to invest. You want somebody who is gonna borrow your money, but when they return your money, they return it with some profit, like some interest, right? So if you take a look at the countries, for example, US dollar is a very powerful currency. It is the world reserve, right? And you want to take a look at what is the current interest rate. If US dollar is giving good interest rates, then definitely you can invest in the US dollar. Unfortunately, we have not seen the Feds reducing interest rates so far. That has not yet happened, meaning that they have still upheld it. They are still planning, or I think they're just being careful so that they don't mess things up, right? Because it's a very critical situation. So in this scenario, if the US dollar interest rates, are being upheld and the interest rates are okay, so investors have two options here. If, for example, if you ask me, where would I invest my money? I'd either invest in US dollar to earn interest, or I invest in oil, because right now there's gonna be demand of oil, right? Then gold, what does that mean to gold? Boom, it's going down. Okay, but then also, so don't be shocked when the market opens, then you see a gap down here, massive gap down on gold. Don't be shocked, because take a look at technical side. We had an inefficiency here. We had a fair value gap here. Take a look at it right here. You see it? And how did the price react to it? You see how oh, sorry, that's not even how it's supposed to be done here. Sorry. You see how price respected it. We never displaced anybody. The body be above that. We did not create any inversion here. This is not inversion. We respected it. The second country host back in. So don't be shocked when you open these markets. Then boom, this just goes down. Okay. Now, when do we expect gold to go up? Like I think in one of in some of my notes, I promised you also talked about, and for how long will gold keep on dumping? So For how long is something that we are not aware of, we are not sure of, but we know that one thing for sure: when the war is over, or if US finally manage to to maintain order in the Strait of Hormuz, whereby fuel start flowing very well, and we don't have any issues, then definitely gold is gonna gain some strength, because now people gonna have to balance between, meaning that the demand for oil is gonna go down. When the demand of oil is gonna go down, people, on the other hand, people gonna be looking at at US dollar. Does the Feds increase rates, or they maintain them or reduce them? If they reduce them, then very good. People are gonna go for safe haven, that is gold. And that's when gold is going to push. So as of right now, nobody knows, because Trump might just end up saying something right now. And if he says anything, he say, okay, we've had peace. Now there's plenty of oil, there's plenty of this, and then this will automatically change everything here. But if that happens, you will definitely see signs. You're gonna be looking for signs like, okay, what is the current technical side, or technical analysis? What does technical analysis say about this? Do you have market structure shift to the bullish side? Do you have bullish fair value gaps, and so on? So yeah, that's about this lecture. I don't want to make it quite long, but I just wanted to give you to give you guys heads up on why gold is dumping and for how long, and it all depends on the geopolitical factors happening out there. This war between Israel, Iran, and the US has really taught me a lot in terms of paying more attention to macroeconomics. Like, I've been a more technical set of guy, but if you really want high probability trades, if you really want to be that guy who like you have that conviction whenever you enter or engage in a trade, you have to now start paying attention to macroeconomics. You have to read the news, you have to analyze, you have to understand how do these things affect each other. Next, I'm going to be talking about inflation. So see you in the next one.